I think that, first of all, probably what happened in London may have a short-lived impact on market, but I think that probably the most important factor will continue to be the data coming from the US. We got last week mixed data coming from the non-farm payrolls, but overall we still think that reflation is still ongoing, and the fact that the global economy is still doing pretty well. So this is going to remain a more medium-term driver for risk appetite and for equity markets overall.
Xavier, do you think that June rate hike is still on track, and where do you see the Fed going from there?
I think yes, a rate hike is on track. I think that already over the past few weeks, FOMC members are really raised the bar for not hiking interest rate, and I think that all the ingredients are there for the Fed to continue to normalize its monetary policy. So besides June, I think that we do expect additional rate hike by the end of the year, and probably it will be also the time for the Fed to start, cutting back quantitative easing, so meaning stop reinvesting the proceeds of asset purchase. So maybe the Fed has not a full-fledged plan to do that, but I think that it will be a question that needs to be addressed in the second part of the year.
Okay, from your notes, I see you're overweight on Asian equities, and you're actually positive on emerging Asia equities. What are you buying?
I think we are clearly buying those markets where we can see valuation undemanding, like for instance Korea and Taiwan, and also equities or sectors that are still very much driven by the manufacturing rebound, and the fact that also driven by rising demands from overseas markets, including Europe and the US. So basically, we tend to prefer Korea, Taiwan versus China, where we tend to think that it's probably time to take some money off the table, considering the risk of growth deceleration that we are started to see with receding PMI.